Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate jargon and numbers so you don't have to. Today we are diving deep into Textron Incorporated's latest quarterly report. You know, the kind where they tell us how they are doing and what is cooked up for the future. Let's just say things are moving and shaking at Textron. They are reporting their numbers for the period ending the 27th of September 2025, and it looks like we have a lot to unpack. Before we dive in, if you appreciate understanding what these corporate filings actually mean for the companies we invest in or interact with, make sure you are subscribed. We also have a fantastic community over on Discord linked in the description below, so come join the conversation. So looking at the top line, Textron brought in a total of $3.6 billion in the third quarter of 2025. That is up about 5% from the same time last year. For the first 9 months of the year, their revenues reached a hefty $10.6 billion, also up a solid 5%. This shows a consistent growth trajectory, which is always a good sign. Digging a bit deeper into where this money is coming from, we see that manufacturing product revenues are looking strong. For the 9-month period, they hit $9.1 billion. This is up significantly from $8.2 billion last year. This tells us that the core business of making things is really driving the company forward. Now let's break down the segment performance. Textron Aviation is a big driver here, with revenues jumping up by $138 million in the third quarter. This is due to more aircraft sales and a boost in aftermarket parts and services. They seem to be selling more Citation jets and turboprops, which is great news for that division. Bell Helicopters also saw a nice increase of $97 million in the third quarter. This is mainly thanks to their military aircraft and support programs like the MV-75 program. While commercial helicopter sales dipped a bit, the military side is really picking up the slack. However, not all segments are booming. The industrial segment saw revenues drop by $79 million in the third quarter. This is largely because they divested their powersports business, which included brands like Arctic Cat in April 2025. So while it looks like a decrease on paper, it is partly a strategic move. Looking ahead, the backlog at Bell is really impressive. It increased by a significant $762 million, which is a 10% jump. This is driven by new orders exceeding deliveries, and importantly, a large award for the MV-75 program prototype phase. This suggests continued strong demand for their military products. Now, there is always a bit of complexity in these reports. We see a small loss from discontinued operations, totaling just $1 million. This is usually tied to businesses they have sold off or are in the process of selling. It is not a huge number, but it is worth noting that they are cleaning up their portfolio. On the expense side, interest expense increased by $4 million in the third quarter. This is mainly due to lower interest income earned on their cash savings. Overall interest expense for the first 9 months was $90 million, up from $71 million last year. This is something to keep an eye on, as interest rates can impact a company's bottom line. Let's talk about taxes. Their effective tax rate was 25.6% in the third quarter of 2025, which is higher than the US federal statutory rate. This is largely due to new tax laws affecting foreign income and research credits. For the 9-month period, the rate was 19.9%, which is lower than the statutory rate, largely due to those same research credits working in their favor. The company's backlog as of the 27th of September 2025 stands at an impressive $19.1 billion. This is up from about $17.9 billion at the end of last year. This backlog is a strong indicator of future revenue and stability for the company. Now, moving into a broader view, Textron Incorporated is a well-established company. They operate in several key industries, including aircraft systems and industrial products. Their diverse portfolio helps them weather economic ups and downs. You can see by the filings that they are a large accelerated filer, which means they are a big player in the market. Looking at their stock, they have over 176 million shares outstanding. This is a substantial number, and their stock is traded on the New York Stock Exchange under the ticker symbol TXT. In terms of profitability for the 9 months ending the 27th of September 2025, net income was $686 million. This is very close to the $683 million from the same period last year, a sign of stable performance. The balance sheet shows assets totaling $17.4 billion in liabilities and shareholders' equity, also balancing out at $17.4 billion. This indicates a healthy financial structure. Importantly, their shareholders' equity is over $7.4 billion. It is interesting to note that Textron repurchased shares of its own stock. In the 9 months ending the 27th of September 2025, they spent $640 million on buybacks. This is a common strategy for mature companies to return value to shareholders. Now, for the part that requires a bit of caution, the company does provide forward-looking statements. These are essentially educated guesses about the future, and they come with risks. Factors like government funding changes in defense budgets, interest rate fluctuations, and global economic conditions can all impact their future performance. They openly acknowledge these uncertainties, which is a good thing for transparency. So what is the verdict on Textron's latest report? Textron is showing resilience with solid revenue growth driven primarily by their manufacturing segments. The strong backlog at Bell and Textron Aviation signals continued demand and a healthy future pipeline. The sale of the power sports business also shows a clear strategy to focus on core profitable areas. While rising interest expenses and the complexities of government contracts present ongoing risks, the company appears to be managing these effectively given their historical performance and current financial health. They are a large established company with a diversified business model, which generally provides a good cushion during economic fluctuations. Alright, that is our breakdown of Textron Incorporated's latest filing. What do you think about their performance and their outlook? Let us know in the comments below. If you found this analysis valuable, please hit that like button and subscribe for more deep dives into corporate finances. And don't forget to join our Discord community linked in the description for more discussions and insights. Thanks for watching, and we will see you in the next one.